What's up guys, my name is Angel. 2022 is up to a bumpy start so far and is already feeling very different compared to the last 1.5 years where it felt like the stock market only knew one direction, up. Since the start of this channel, it was always my intention to not only share moments with you where my investments are up in value, but also openly talk to you when they aren't performing as well. That's exactly what's happening right now, and it's just part of the journey. As I'm recording this Tuesday morning, the 25th of January, my favorite ETF, the Vanguard FTSE All-World, is down more than 7% since the start of the month. That means my ETF portfolio has lost more than 10,000 euro in value over the past 3 weeks alone. Ouch. But more on that later. If you just got started investing into stocks via ETFs, which is what I do, or you bought stocks in general over the last 3 to 6 months, it's very likely your portfolio is in the red now. And sadly, crypto has not been doing any better, with Bitcoin dropping 23% and Ethereum by 36% this month alone. I certainly can't blame you if you're feeling nervous as a new investor, especially if you've never experienced sharp corrections like this before. So in today's video, I'll quickly mention why the market dropped. I'll show you how much my ETF portfolio is down in actual numbers so far in 2022. Then we'll have a closer look at the current market correction, also in context of some historical data for our ETF. And lastly, I'll tell you my own opinion as well as what I'm doing with my investments. You might be surprised. But before I get into it, don't forget to smash the like button if you enjoy videos like this, and if you'd like to support me and check out anything that I mentioned in the video, you can find all the links in the description below. Also, please don't forget that none of this is investment advice, just my own opinion based on my own personal experience as an investor. So I don't want to waste too much of your time talking about reasons why the market may have dropped. It's probably a combination of the Federal Reserve in the US announcing a tightening of its monetary policy, conflict fears in the Ukraine, and tensions between the US and China in Taiwan. Also, we've seen amazing returns of over 28% last year in euros, so maybe it was just time for a correction anyway. There will always be new reasons to worry, just as there always have been in the past. But it's never a good idea to let emotions get the better of you and influence your long-term investment strategy. There's one thing I always try to mention in my videos when I talk about ETFs covering a broad stock market index. These are long-term investments, not something to jump in and out of based on the latest newspaper article. You should have an investment time horizon of at least 5 years, ideally 10 years or more. Stocks have also been a great hedge against inflation in the past, as you can see in my recent video all about the topic. Based on over 100 years of stock market history, I'm expecting average returns of about 7% per year from my main ETF, the Vanguard FTSE All-World. But of course, this average comes with a lot of volatility, both to the upside and to the downside, in the form of regular corrections and crashes. And that's exactly what happened over the past few weeks. So let's have a look at how my ETF portfolio, which I share with my wife, has been holding up. Well, it's not looking pretty in 2022 so far. Over the past month, we're down more than 6%, we're close to 10,000 euros in value. We're actually down almost 8,000 euros or 5% last week alone. And looking at our historical ETF performance, things are looking a lot better. Since 2017, we have an internal rate of return of 13.95% per year. Over the last 4 years, so not including 2022, we had an internal rate of return of 19.29% per year, which is extremely good. And here you can see the monthly returns in a heat map. Last time we had a drop like this was in February and March 2020. And these were our yearly ETF returns so far since 2017. And here you can see our last negative year was 2018 and our average yearly return since 2017. And based on yesterday's price data, we're actually not down 10,000 euro, but actually 11,147 euros so far this year. That being said, since the start of our ETF investing journey, 4.5 years ago, we're up 29,650 euro, even though we're currently in a correction. And since zooming out is always a good idea when it comes to long-term investments, I wanted to show you some more monthly charts of the MSCI All Country World Index, which is really close to the Vanguard FTSE All-World Index that we invest in. And here we can see that we've had similarly bad months in 2020, in February and March. Then in 2018, 2016 wasn't that far off. 2015, 1 year before, and 2011 as well. So these are just things that happen and are part of the journey. And here you can see the charts as well as the yearly returns of the same index, which is really close to the FTSE All-World. There's a nice saying when it comes to investing: when in doubt, zoom out. The long-term performance is what matters. Don't get discouraged when the market moves against you in a given month. So let's talk about what I'm doing with my own investments. But before I tell you, I want to share the results of a YouTube poll I did a few days ago. I wanted to get a better idea of how you guys were feeling now that the market dropped. 39% of you voted for I'm excited to buy shares at a discount. Only 3% voted for I'm scared, why did I ever watch one of your videos? 50% voted for I don't care, I'm investing long term anyway. And 8% voted for bye-bye, financial independence, is McDonald's hiring right now? I have to say I'm really proud of how you guys voted, and that you all seem to have the right long-term mindset when it comes to your investments. My wife actually voted for bye-bye, financial independence, is McDonald's hiring right now? Luckily, my sources tell me that she's still keeping her full-time job as a graphic designer as well as her monthly ETF savings plan, so maybe there's still hope after all. Getting back to our investments, our ETF strategy couldn't be more simple. We just buy the accumulating Vanguard FTSE world at the beginning of every month. That strategy doesn't change when the market moves in either direction. Only sometimes when I see the market drop by more than 3 to 4%, and if I have some spare cash to invest, I buy some more shares manually. That's exactly what I did last Wednesday morning on Interactive Brokers. I had a bit over 2,000 euros available to invest, so I bought 20 more shares and I only paid €1.25 in commissions. I'm using the tiered pricing plan, which you can change to in your account settings. Of course, I could have gotten even better prices this week when the market dropped a bit further, but nobody can successfully predict a market decline, so I don't try to either. As a rule of thumb, time in the market beats timing the market. I just treat these corrections as an opportunity to buy more shares at a cheaper price. At the end of the day, I was still able to get a nice 4% discount from my ETF's all-time high 3 weeks ago. By the way, you can find a link to all my favorite low-cost brokerage accounts, including Interactive Brokers, down below in the description. This is also one of those moments where it's nice to have a diversified portfolio with part of my investments in peer-to-peer lending. Peer-to-peer loans are generally uncorrelated to the stock market, and I'm still receiving my interest payments on a daily basis, averaging around 10% per year. I'm actually seeing a lot of attention return to peer-to-peer lending as an asset class now that the stock market has cooled off a bit and doesn't feel like easy money anymore. I even added a new platform yesterday, Bonster, but I'll tell you all about that in my next monthly update, so stay tuned for that. And if you're wondering about my top 5 peer-to-peer platforms, make sure you check out this video. Alright guys, hopefully now you have a better understanding of how I'm approaching market volatility and my portfolio losing over 10,000 euro in value within a few weeks. Corrections or crashes are part of investing. As long-term buy and hold investors into low-cost broad ETFs like the Vanguard FTSE world, monthly movements don't matter. You should also never let emotions or noise from the latest news headlines influence your investment strategy. Moments like this can actually be opportunities to buy great companies at a discount. And if for whatever reason you're convinced that the market is definitely going lower over the next few weeks, here's what you can do. Just split up the amount that you're planning to invest into a few pieces and dollar cost average, or in our case euro cost average, the amount into the market at regular intervals, instead of investing it all at once right now. Just do whatever makes you sleep better at night. That's all for today. Before you take off, don't forget to smash the like button if you enjoyed the video and to subscribe if you want to see more. Also, if you'd like to support me and check out anything that I mentioned in the video, you can find all the links in the description below. Thank you guys so much for watching, and until next time.